Real estate investors, those of you that hold commercial properties, depending on the property type and how those properties have been financed, many of you may find that you are going to have trouble refinancing those properties when the time comes next year or in 2024. So what type of properties are going to have the hardest time refinancing? Those that were the hardest hit or would have been decimated by the pandemic, namely hospitality properties like hotels, convention centers, restaurants, commercial retail in general, and then office. We saw all of these property types hit very hard during the pandemic, and had the Fed not stepped in and purchased those commercial mortgage-backed securities, those property values would have tanked. So in order to protect more or less the investors, not the commercial real estate investors, but the investors that are buying those commercial mortgage-backed securities, the Fed stepped in and created this artificial market. So it just kept the market humming along like normal and the prices stayed high. Well, now that the Fed stopped buying commercial mortgage-backed securities, the market has sort of had to adjust since March. And what's happened in that time? The interest rates have continued to climb. So we have interest rates going up since the Fed stopped buying commercial mortgage-backed securities in March. And we also see that a lot of these properties are still sort of in distress. They're not back to their prior occupancy levels or their prior, income levels that they had before the pandemic started. And so they're sort of still in distress. But you haven't seen a lot of decline yet in commercial real estate values. I think that decline is right on the horizon, particularly for these specific property types that I mentioned. So with less and less demand for properties as the interest rates have gone up, that will affect prices. Less demand means prices are going to get pushed down to attract more buyers. And then the other factor that we're talking about is now we don't have these artificial buyers anymore for the commercial mortgage-backed securities, the Fed being those artificial buyers, if you will. So there's less funding out there available for those types of properties. Commercial property owners that own those properties and are looking to refinance in the next year or two are going to come up with a pretty hard reality. And why? Because when they go in to get an appraisal, the bank that's going to set this loan up for them on the refinance, they get an appraisal and they discover that the property value is less than it was, say, 5-6 years ago. And so now they're not going to want to lend as much toward that. And in many cases, these real estate investors won't be able to even refinance what they owe. Some of them will come to private money lenders, commercial bridge lenders like us and say, hey, how much will you lend? Then we would say, we'll lend this amount, but you're going to need to bring in additional cash to pay off what you owe, because we're not going to lend the total amount that you owe. That's called an equity injection. The commercial property owners would bring in that additional equity, and then we would fund the balance, and then the loan would get paid off. Another scenario that could play out is that a distressed asset fund comes in and they negotiate a reduced payoff on the loan. And then the worst case scenario would be foreclosure. A commercial property owner isn't able to refinance what they owe with another lender. They can't successfully negotiate a discounted payoff with the current loan. And so the lender forecloses on the property and the commercial property owner loses it. Bottom line, if you are a commercial property owner that owns one of the property types that I've mentioned, and you're going to need a refinance in the next 1 to 2 years, this gives you something to think about, and you would probably want to get ahead of the game in this regard as quickly as you can. And for commercial real estate investors that are looking to pick up these types of assets in the next 1 to 2 years, this could present some opportunities for you.